Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A hanging man pattern on Friday, but it was so much more than just that. It was a second consecutive close over and above the broken but still influential upper time, currently 104.44, of the January to May 2021 bearish Andrews pitchfork. Now, I would normally retire a pitchfork after two consecutive closes over or under it, but in this case I will make an exception, not just because I think it will become support, but for two other reasons. Firstly, this pitchfork has been broken many times on the lower time, currently 97.03, yet each time it has repaired itself. Secondly, because of its long life, over a year and a half. I think there may be more from this pitchfork to give, so I'll keep it on here for a while at least. Just below the upper time is the support of the congestion zone, 103.38 to 103.69, which currently also contains a long moving average, currently 103.54. Another reason why last Friday's action was important was how prices had finally reached target X2 at 105.35. This is the primary target up from the highlighted in blue September to date ascending wedge pattern. A secondary, harder to reach target, X3 in the 107.65 area is what's left now. We now have overhead the April 2017 low at 105.68 and the 2020 low at 106.35 and the April 2020 low at 107.25. Before we reach target X3 area, and then the May 2020 low that is just above that at 107.66. So far today, a lower open, but an immediate move higher, through last week's high and slicing through the April 2017 low at 105.68, but not really sustaining it, but still bullish enough right now to look like a bullish engulfing pattern. My only concern is that we might turn lower into a shooting star type pattern. Cable, aka sterling against the US dollar. A hanging man pattern on Friday with highest close since mid-June. Prices closed once again over the June 2020 low at 122.48, but were capped by the next congestion area overhead at 123.16. Interestingly, the base of the action was on the slowly declining long moving average, currently 121.29. Overall, in the last 2 weeks, the market has achieved both the primary target X at the 120.20 and the secondary target X1 at the 122.50 area for the late September to late November ascending triangle. As I've repeated many times, much as in Eurodollar, there are two core patterns here at work. I've highlighted the relevant trend lines in blue to help visualize what is going on. Well, I've deleted one of them now because the ascending triangle, we've already reached all the targets. But we have still also the September to date ascending wedge pattern, currently at 116.46 to 119.12. Both patterns have been previously compromised and both have repaired themselves. As already mentioned, the ascending triangle has had its targets reached. This now leaves the primary target X2 in the 124.20 area and the secondary hard to reach target X3 in the 128 even area above for both for the ascending wedge pattern. The first of which the market has managed to travel quite a distance to already. Now, so far today, a lower open and a dip to gather ammunition at the June 2020 low at 122.48 before a move back up through the congestion at 123.16. However, the move up has not been sustained, and we're back down to where roughly we opened and looking like an indecisive spinning top right now. Euro sterling. An indecisive spinning top on Friday after the previous session's interesting bearish black crow that just managed to reach down and touch the secondary harder to reach target X1 in the 85.45 zone for the recent November based roof pattern. This touch and go was prompted by the slowly rising long moving average below, currently at 85.41. Meanwhile, the flatlining medium moving average overhead, currently at 86.26, is capping the market, though not necessarily that aggressively. If I'm actually honest about it, not that aggressively at all. Above the medium moving average, you have the April 2020 low at 86.69. But I suspect the lesser Fibonacci resistance at 86.98, which doubles as the base of the roof pattern, is probably better resistance. Meanwhile, below the long moving average, we have the April 2021 low at 84.70 and the March to date uptrend, currently at 84.53. Now, so far today, a reactionary move back up, but still in between the two moving averages. US dollar against the Indian rupee. An interesting piece of action on Friday. In fact, 2 days of interesting actions, if you also count Thursday, which I do. So Thursday was an indecisive doji cross, with the gapping open since filled in and close right on the recent 50% Fibonacci line at 81.13. It's actually a great vindication of that pattern if there was ever one to have. Interestingly, the Friday's action was not the usual bullish or bearish engulfing pattern that you tend to expect after a doji cross, but instead a straightforward bullish white soldier. I suspect this was due to the same reason why we had Thursday's low, exactly where it was. It was a fear of testing the lower time, currently at 80.99, of the mid-September to mid-November bullish shift pitchfork. You can see this highlighted in red on my daily chart. Not only that, but just below the lower time we have the rising medium moving average, currently 80.81. This tempers the attempts once again to move down towards target X1 in the 80.28 zone, the harder to reach secondary target for the September to early November ascending expanding wedge pattern. You can see that highlighted in dark blue on my daily chart. The primary target in the 80.90 zone had already been achieved back in early November. I've said this before and I'll keep saying this to myself and to you as well. I continue to wonder if perhaps, just perhaps, reaching the primary target may have been enough. I've been contemplating this for a while now, and I'm afraid it still needs more contemplation, plus further data over some more sessions. Now, so far today, a lower open, yet still within the main body of last Friday's action, and dipped down to the 50% Fibonacci line where the market once again didn't like it down there and has risen back up and higher. We've seen prices reach the next Fibonacci level, the short medium moving average, also at currently 80.81 and just short of the congestion around the 90.91 area, where we have 81.90 area. I misread that. The 81.90 area, where we have halted. Looking at it, I suddenly wondered if the November to date action might be building into an ascending triangle. I'll leave that thought hanging there to finish with on this part. US dollar against the Brazilian real. A really interesting combination on Friday of a key reversal up and a bullish engulfing pattern, if only just on the latter. Wider hesitation of an indecisive doji cross on Thursday and a combination bullish pattern on Friday was a bit surprising until you study a little more closely what lies below both. That is, and these are in no particular order, the middle time currently at 5.11.43 of the July to late August bearish shift pitchfork, the very slowly rising long moving average currently at 5.11.10, and the significant 38.2% Fibonacci line of the June 2019 to May 2020 move at 5.10.87. All these supportive elements within 60 ticks of each other and concentrating even more during the first part of this week. What was the reason for the move up? Well, that was the reason for the move up. Yet in this move there was also some bearish pressures that eroded the move up. Firstly, the Fibonacci-based congestion between 520.27 and 520.31. That actually started the erosion. Then the recent 50% Fibonacci line at 522.76 that eroded it a little more. And finally the declining medium moving average, currently 523.71, that stopped it. Prices closed below the 50% Fibonacci line at 522.76. Above now we have the short medium moving average, currently 526.75. And what I have repeatedly said is not that good support stroke resistance, and that's of the 50% Fibonacci line of the May 2020 to April 2022 move at 527.37. All that is pretty interesting on its own, but what is the huge elephant in the room over all of this? And that is the weekly key reversal down we had here last week. That needs to be addressed in the next few days, whichever way the market chooses, as this comes on the back of the outside month made here in November as well. The US dollar against the Mexican peso. A really interesting key reversal up on Friday. That was almost, but not quite, a bullish engulfing pattern. Prices rose up through the March 2020 low at 1915.03 and through the fairly free area overhead until it reached and pierced the combination of the significant May 2022 low at 90.40.70 and also the upper time, currently 1938.40, of the well broken but still significant and well still influential, let's say, March to May bearish shift pitchfork. This is highlighted in red on my daily chart. I should say once again, as I've done this a few times now, and each time I've removed it and keeps coming back and removed it and keeps coming back. Anyway, this combination capped the market Friday. Above these we now have the 2021 low at 1953.63 and the congestion from early June between 1956, well about 1956 even, to 1964 before we reach the middle time, currently 1969.59 of the still intact bearish shift pitchfork for the same move. I've highlighted this pitchfork in blue to aid visualizing it. This pitchfork can also be called on the aid of the April 22 low nearby at 1971.68 and the declining short medium moving average, currently 1974.41. So far today, a good looking, for now, follow on higher to Friday's key reversal up, punching up through the broken upper time, the May low and the 2021 low, but getting bogged down in the congestion from early June between 1956 to 1964. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.